Gold prices continue to see prices moderately softer as that trend lower continues that we've seen pretty much throughout the month of October. Although we do stay not too far away from the 1500 mark, which has sort of been a magnet for gold prices. As far away as we get, we drift back towards 1500. And then we move slowly away from it again. It's basically become a risk play here as we start to see things like Brexit and China with a little bit of optimism, and all of a sudden they don't need to have that extra insurance policy on. We start to see gold prices dip, but they don't spike lower, which shouldn't be a surprise because while there is optimism in the market for clarity on those issues, there still is no real resolution, no pen to paper, and nothing that would suggest that anything is over. So certainly we will continue to watch that, but I think the closer we get to the deadline for Brexit, and as we continue to get more and more talks with China and Chinese representatives, we start to see possibly a silver lining in what has been a very long road for both issues, China trade and the Brexit issue. So right now, gold price is starting to continue down that trend, but certainly well within striking distance of getting back to 1500. That remains a very key level. If we get back above 1500 on a settlement basis, I do think the market will find buyers coming out of the woodwork with the idea that if it gets back up there, something's wrong, something didn't go right. And at this point, gold is very emotional, waiting for that it moment, waiting for that resolution that it has not gotten yet. The dollar, on the other hand, boy, October has been a month the dollar would like to forget. Down about 2.5%. The dollar index itself continues to trend lower. We did see a modest uptick today. I don't think that was really relevant to gold trade. But I think at this point right now, the dollar needs to get its sea legs back under it. Obviously, this news with Brexit, with the UK, with the pound and the euro, obviously creating a bit of a risk on trade, which is also helping the yen. So at this point, the dollar is sort of a second thought and has been suffering such. But I think ultimately, in the bigger picture, again, we get some resolution or we don't. This trade could change very, very quickly. But it has not been a typical gold dollar trade that we're used to. Dollar goes down, gold goes up, and vice versa. We have not seen that. So right now the dollar remains weak, although it did see a modest uptick today. Lastly, let's look at those positioning from the CFTC. While the speculators remain long, they are starting to get out, but not like we've seen in the past when we see these big moves. We see that the speculators were more the cause. We see big drops in open interest, big drops in their positions. I think at this point, it's kind of been a steady as she goes. Yes, there are some speculators that are long that are out there that maybe are looking to get out and get back in at better levels. However, we're not seeing this all happen at once, which I think is the big reason why the market has been steadily trading lower and not seeing that big spike move that we're typically used to when after a big move higher, we see a big move lower based on what the speculators are doing. I think speculators right now are going to remain long, even if it becomes a little painful. Obviously, all eyes are at the end of the month. We have, which is next week, we have October FOMC. Not necessarily will the Fed cut, that's priced in, but what will they do next and what will their guidance be? Likewise, Thursday is the Brexit line in the sand. Will they get this vote through? Obviously, there's still some obstacles there, but there is some optimism around it. And then lastly, the one that I think is being the least talked about is the fact that the ECB will have a new president a week from Friday. Ms. Lagarde will take over for Draghi, President Draghi, who has his last meeting this week. So I think those three things, along with the China and U.S. trade deal or no deal, continues to sort of be a wet blanket over the market. And at this point, speculators, I think, aren't going to be fooled by saying getting out and hoping the market goes lower. They may scale out with the idea that they want to buy at lower levels, but don't want to miss any sort of spike move higher, which could come anytime between now and then, likely sometime before or just after the Fed. That will be the key knee-jerk reaction, and then Brexit we may already have an answer to by then. So gold prices right now continuing to trend lower, but remain very close to that key 1500 level and likely will till we get through the end of next week.